Welcome to today's broadcast. My name is Colleen Patterson, and I'm the Director of Employer Services and Compliance at Savoy. Believe it or not, this is week 3 in our series of On the Road to Reopening. As we know, the Coronavirus Aid, Relief, and Economic Security Act, or as we all have loved to call it, the CARES Act, created 2 economic relief programs for American businesses. Even though our communities are slowly beginning to open, there are still a lot of questions about the differences between the 2 economic relief programs, which are the Paycheck Protection Program and the Retention Payroll Tax Credit. Both programs help pay employees and keep them on the group health insurance plans. Joining me around the table today is Jen Berman. Jen is an employee benefits attorney and the CEO of MZQ Consulting LLC, which is a benefits compliance firm. She's a leader in analyzing healthcare reform developments and frequently serves as a speaker and commentator on a wide variety of healthcare reform and employee benefits issues. So welcome, Jen. So the first question that I have for you today, Jen, is what are the key differences between the 2 programs, and is one program better than the other?
Hi, thank you so much for having me. So there are some really large key differences between the PPP and the employer retention credit. The first is the size limitation. So the PPP is only available for employers with fewer than 500 employees, whereas the employee retention credit is available for any size employer. But for the employee retention credit, in order to qualify, you have to have really experienced a substantial closure. So one of 2 things has to happen. Either the business has to have been shut down by sort of a state or local order, a government shutdown of the ability to operate, or the business has to have experienced a 50% reduction in gross receipts relative to the same quarter in the prior calendar year. So there's certainly a lot of employers who would qualify there for the employee retention credit. And that credit, incidentally, is the ability to have 50% of what you pay to that employee reimbursed up to $10,000 per employee. So it's basically $5,000 in wages per employee, and there's not a time limit on it like there is under the PPP. What there is, though, is a limit relative to whether or not an employee is in working status. So for employers under 100, the employee retention credit can apply, and it can apply and be used to offset wages paid to employees who are working. However, if they're over 100, and for this purpose, we're actually counting using the ACA's rules, which, there's a million ways to count under these new laws. If they're over 100, the employee retention credit is only available where the employer has paid the employee, but the employee is unable to work. So they're getting paid to sort of sit at home, and the employer is able to do that. So it kind of makes the ERC, the retention credit, difficult to be helpful because you have to have experienced a huge financial loss, 50%, or be shut down, and still be able to pay your employees their normal wages. So I do have a couple of clients who are looking very seriously at this and may be able to take advantage of it and choose to take advantage of it. But they're few and far between, and they're ones that have very, very good cash positions anyway in order to be able to do that. Now, the PPP, on the other hand, has its whole own set of rules and regulations around when to use it. And those loans become forgivable, and I know we're going to talk more about that today. So that's also a form of essentially grant money. The real downside to that is just how restrictive the uses for the grants are. That being said, I think in most cases, we're going to find most employers who qualify for both are going to go with the PPP rather than the employee retention credit because it is a little bit more flexible.
Great, thanks, Jen. And you're right. If there's that flexibility to it, and you had mentioned that essentially that loan that under the PPP has the ability to become a grant. So one of the attractive provisions of the PPP loan is that approved borrowers can apply for loan forgiveness. Would you please provide an overview of loan forgiveness and share some tips you've learned along the way that brokers and employers need to know?
Sure. So the loan forgiveness rules are actually subject to much conversation, as you know, Colleen, and they may change. So important to note that it's May 26th as we are recording this. But as of right now, employers can be forgiven their loan amounts, which basically makes it into a grant, right? It's free money from the government to pay for payroll costs. And there's a pretty in-depth definition of payroll costs there, but it's basically compensation up to $100,000 a year, cost of benefit plans, sort of the typical payroll expenses. Also for interest on mortgages and for leases. So leases of not only um, rent in the traditional sense, but also leases of personal property, which is one of those tips that I would point out that not a lot of folks have looked at. And then the fourth category for forgiveness is utilities. And on utilities, I would just pause to say that they're a little bit broader than one might think. You know, I hear utility, I think gas and electric, but it also includes internet, it includes telephone, it even includes costs related to transportation, which really get to gas and maintenance on vehicles that are used for work purposes. So you have this category of items that are forgivable, meaning that if you spend them within the 8-week forgiveness period from the date that your loan is issued, they may be eligible for forgiveness. But in order for it to actually be forgiven, an employer also needs to make sure that they maintain essentially the same headcount and that they don't reduce the compensation of any individual employee by more than 25%. And that compensation reduction is actually looking at an employee by employee basis. So there's a relatively complex set of calculations that go into this. Colleen, I know you've seen the 11-page PPP loan forgiveness application and all of its complicated instructions, but that is sort of at the high level, the expenses that we are talking about. One last point, though, to note on this, and this is one of the reasons why we're expecting there to be maybe an expansion to what can be forgiven under this rule, is that it does require that 75% of the amounts that are ultimately forgiven be towards those payroll costs. And a number of employers who are not back up and operational yet are concerned about what they're going to do because they don't have enough payroll costs being incurred in their initial 8-week period. So that'll be an interesting development to watch as we move forward.
I think you're right in that it's definitely a complicated process and it's unique, the forgiveness process, I think, for each individual group, just like it is when they were applying. One of the other things certainly that comes up when we're talking about these payroll costs is how and if carrier premiums factor in. So as we know, carrier partners are providing temporary relief in the way of premium deferral. And in some cases, we've even seen them beginning to give premium rebates. How does this impact an employer who took advantage of the premium deferral or may have received a premium rebate and is now applying for the PPP loan forgiveness?
Well, it can be an issue. So let's talk first about the deferrals. For an employer that took advantage of a deferral, they might find that they need to undefer those costs. And I'm sure, Colleen, you've already experienced this some. So in order for an expense to be forgivable, it has to have been incurred and paid during the forgiveness period. And so if you have an employer, they're looking at maybe the months of May and June as their forgiveness periods, they're going to want to make sure that they're paying their premiums in real time then so that they can be forgiven. To the extent that they're deferred outside of the forgiveness period, maybe until later in the summer, they won't qualify for that forgiveness. And so that's a real issue for folks who are trying to maximize their PPP forgiveness. And as I mentioned, I have seen a number of my clients go back to the carriers and undo their initial deferral. Now, the rebates are an interesting item because the rebates are really looking at the claims spend during the year so far. And so there becomes a question of, what time frame do we attribute the rebates to? and how do we really quantify what is a true premium payment in light of the fact that, it's not going to be what was originally projected at the beginning of the year. And there's no good answer to that question. Um, but one of the things that I'm doing is advising groups to take a good faith approach to how they handle these things. It's very similar to self-funded plans, where I'm saying just use the FIE, use the fully insured equivalent. It's too hard to do anything else. So relative to rebates, though that money is coming back because there's not sufficient claims being incurred, but it would be impossible to predict exactly how and when. So I am not sweating the rebates. I don't think the SBA is going to get to that level where they're going to start reducing forgiveness based on that criteria.
Okay, good to know. So keeping along these lines and this train of thought, is there any provision that you're aware of in the PPP loan program or any guidance that you may have seen that stops an employer from changing or reducing their employee contribution strategy, or even considering a change of plan where they might downgrade that could have an impact on what their premiums could be?
Nothing in the PPP guidance that creates a problem there relative to premium payments. We do have to be careful about just all of the normal issues that we have. So eligibility issues with carriers, and also, of course, 125 changes. Now, we do know that we can change, we can provide a mid-year change to the employer-employee cost share. We could do that anyway. Employers could do that before if they wanted to pick up more of the fee. And then we also have the interim 125 plan guidance. So there is some flexibility there. And I have worked with some groups who have decided to pick up the tab for a couple of months because they can, and it will be forgiven under the PPP program.
Okay. So one other thing that I thought was interesting is when Congress drafted the PPP loan program, it included a provision regarding the economic injury standard, which requires borrowers to certify in good faith that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. However, what we had seen is that there was recent publicity about PPP high profile borrowers where seemingly they had great liquidity. So the SBA had issued guidance stipulating when making this promise, borrowers needed to assess current business activity and their ability to access other sources of capital without jeopardizing the entity long term. As a result, and the SBA has also noted that all borrowers have to be prepared to demonstrate to the SBA upon request the basis for its certification. So it's likely that an audit is to come. So as we know, anyone who has experienced any kind of audit from any agency for that matter knows how important having a plan, being organized, and having accurate documentation is to a positive outcome. This loan program is very new, as you've been talking a little bit about, has a lot of moving parts, and frankly seems to be clarified as we are moving along with the program. What can you tell us about the PPP Forgiveness Assist program that your company, MZQ Consulting, offers? And is there any new news on this audit component?
Um, of course, there's new news. What a loaded question that was, Colleen. So let me tell you a little bit about PPP Audit Assist, which is MZQ's new program to help employers with their audit, or excuse me, with their PPP loan forgiveness package. So what we are doing is working with employers to help them gather all of the potential documentation surrounding potentially forgivable amounts. There's some complex timing rules, for example, around when a payroll began or ended that can let you pick up maybe 9.5 weeks of income replacement instead of just 8 weeks, as well as getting those internet bills and making sure we have all of that lease documentation. We are pulling that together, auditing it through all of the IRS's complex, and the SBA really, their complex algorithms around what is and isn't forgivable, and producing an audit-ready report documenting exactly what expenses the employer has incurred and actually hyperlinking back to the documentation for it. And as part of that process, we're also going to fill out the loan forgiveness application for the employer as well. So, the reason that we decided to do this at MZQ, it's not our core business. Originally, we are a benefits compliance firm, was because we were getting so many questions and so much concern amongst our clients about what to do with these PPP loans and how they could confirm that what they spent their money on was going to ultimately be forgivable. And I was pretty convinced that this was going to be subject to audit. And in fact, just over the weekend, Memorial Day weekend here, the SBA released on its website a new interim final rule about the procedures and related to borrower and lender responsibilities under this program. And it's really important that we distinguish this from audits related to whether the employer qualified for the loan. So that was the economic uncertainty issue. And ultimately it got resolved by the SBA promising that any employer getting more than a $2 million loan was going to be audited to see if they qualified. Whereas there was going to be a good faith presumption for employers getting less than a $2 million loan that they in fact did need that loan. That's not what I'm talking about here. This new guidance is about the SBA's right to audit what's forgiven. And here the SBA is very clear that while the banks are going to make the initial determination of forgivability, they do have the right and will be auditing loans of any size. And so, that's really what the MZQ PPP Forgiveness Assist program is designed to prepare employers for. So number one, can we make sure we're maximizing our forgiveness? And number two, can we make sure that we're documenting it in a way that will withstand SBA audit?
Thank you, Jen, so much for joining us today and sharing all this information and spending the amount of time that you have with us today. We really appreciate it. At the end of today's broadcast, we invite you to complete a short survey. You can find the link to the survey in the video description below. Once you complete the survey, as a thank you, we will provide you with instructions on how to receive a discount for the PPP Forgiveness Assist program that Jen talked about earlier today. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources available in the COVID-19 section of our new and approved website at savoyassociates.com. From all of us at Savoy, stay healthy and safe. Thank you for joining us today.